And my belief is that whoever is here falls within these categories. And of course, after my remarks, in case you don't fall under these categories and you're present, you'll need to bring that to our attention. This is the normal ritual we carry out when we have been forwarded with tax propositions by government. We know that in the development of this country, there are various stakeholders, and that's the reason why we started this listening to the public yesterday, and today we would wish to listen to you too. Just for emphasis, we would wish that you address yourselves to the specific issues on the tax propositions as appearing in the bill, so that we stay focused on that particular matter. If there are other issues that can come secondary to these particular tax issues, you raise them and possibly explore an opportunity to have that interaction. And before I invite the ones that I've recognized around here are Uganda Manufacturers Association. We shall start in that order. Then Siatini. And then the rest will follow, maybe Kasita. So we are starting with Huma and then Siatini. But before I invite Huma to make a presentation, is there any other institution that doesn't fall within these categories that want to be listened to? And I think silence means there is no such. I just want to also give you the impression that we are here to listen to your views, because when we are here, we represent you. So be rest assured that your views will be taken and considerations will be taken based on the way we conduct business in the Parliament. Without wasting time, I would want to take this opportunity to invite Huma to make their presentation. You're welcome. Maybe before you do, what we shall do, members, is we shall listen to the presentation, then we react thereafter to avoid interruptions during the presentation. Thank you. You're welcome.
Thank you. Chair, members of the Committee on Finance Planning and Economic Development. My statement is in the folder as shared with you. Please accept my sincere salutations to you on behalf of the manufacturing fraternity in Uganda for the role you play in the country's governance. We are gathered here today because we share a single, non-negotiable mission: growing the Ugandan economy tenfold as articulated by National Development Plan 4. Uganda Manufacturers Association is grateful for the support that this committee and Parliament in general have continued to avail in facilitating economic growth and development. Interventions like removal of corporate tax on Bujagali energy have reduced the cost of electricity, while other tax interventions over time have enabled growth, leading to the current 16.5% GDP contribution by manufacturing and employment of 1.3 million Ugandans directly, in addition to growth in exports of manufactured goods to a record USD 2.9 billion, when only 54.6% of installed capacity is utilized. However, the tenfold growth goal under NDP 4, aiming to realize USD 500 billion as the size of the economy by the end of NDP 4, cannot be achieved with business as usual tax tools. Manufacturing being at the fulcrum of the projected growth require corresponding reforms to deliver the growth that we desire under NDP 4. Honorable members, when we look at the financial year 26-27 tax measures, we see some hidden thorns in the number of proposals, the most surprising being withholding tax on capital when Uganda actually lacks adequate capital to finance NDP 4. Such threatens growth. Honorable Chairman and members, the Iran war's shockwaves are already affecting Uganda's manufacturing sector at its core, with fuel prices increasing, surging about 17% since February, and Brent crude spiking 10% to $80 per barrel, directly inflating production costs for energy-hungry industries like textiles, steel, pharmaceuticals. Short-term chaos has already forced factory pauses, margin squeezes, and shipping delays through the Hormuz Strait, while medium-term pressure from currency weakening and 1.3-point inflation jumps to 4.9% threaten to stall value-added growth that barely ticked up from 5,713 billion pre-war. Government needs to wake up. This is not a distant rumble, but an existential threat to a sector anchoring 15 to 16.5% of GDP and millions of jobs. Chairman, please recall the Gulf War oil shocks that crippled African manufacturing by 20 to 30% in input costs. Honorable Chair, long-term devastation looms if inaction persists. A global industrial recession could gut export chains, widen deficits, and derail NDP4 growth targets. Yet Uganda's looming oil production offers a lifeline only if we pivot now to supply chain resilience and diversification. We, the private sector, alongside Parliament, should rally to beseech the President, Ministers of Trade, Industry and Cooperatives, and Ministry of Finance, Planning and Economic Development in this clarion call to mobilize emergency subsidies, fast-track local sourcing incentives, and forge East African community-wide buffers before manufacturing pulse flatlines. The stakes are our economic sovereignty. Ignore this cry and Uganda pays the ultimate price in stalled factories, lost livelihoods, lost jobs, and squandered prosperity. Honorable Chair and members, Uganda's informal sector is a ticking time bomb, strangling manufacturing growth and revenue collection, dominating 54.5% of GDP and employing over 70% of the workforce, nearly 9.8 million workers, while generating 41.3 trillion UGX annually, yet evading corporate tax, income tax, and withholding tax almost entirely. With over 85% of informal businesses unregistered, only 700,000 out of 2.5 million economically active individuals as taxpayers, and a mere 12% linked to formal supply chains, this dualistic monster reinforces a compliant formal sector on life support, amid rampant untaxed activity threatening to drag even formal manufacturers into informality if unchecked. Honorable Chair, Parliament must act decisively now. Formalization is not an option, but the lifeline to rescue revenue-starved growth, to turbocharge manufacturing integration, and avert economic collapse. We pray this House declares war on informality through aggressive registration drives, incentives for supply chain linkages, and punitive measures against evasion, unleashing billions in revenue to fuel NDP4 and safeguard our formal sector's survival before the informal abyss swallows our prosperity whole. Honorable Chair and members, therefore, as we present our specific proposals that have been put together with the assistance of the best tax experts available, UMA desires to see more taxpayers brought under the tax radar, with the reduction of informality which undermines legitimate business. This has prompted UMA to come up with measures beyond what government shared to address this glaring reality. UMA feels that post today's engagement, we should remain engaged to ensure that reforms that merit consideration to facilitate the delivery of NDP4 growth trajectory are addressed. To save your time and get straight to the how, I will delegate my colleague Mr. Richard Mubiru, who is the chair of the business committee, to take this honorable committee through the specific technical adjustments required to ensure how our tax law builds factories rather than closes them. Honorable Chair and members, I thank you and I submit.
Thank you for your remarks. I think we can go straight to the issues that you have raised. Just be specific to them so that we can save time. Yes.
Thank you very much, Mr. Chairman. Mr. Chairman, I've seen their document is quite rich. Through you, Chair, maybe you could guide other stakeholders. If the issue has been raised here, they need to note so that they don't again come to the floor and repeat the same, so that we can conclude within time.
Yeah, I hope everyone is clear about that. If a specific issue, tax issue, has been raised by UMA, unless you contradict, you shouldn't raise any, you shouldn't again repeat it. So that's how we want to guide presentation. So, Mr. Mobilu, can you go ahead and...
Thank you, Mr. Chairman. Thank you, Mr. Chairman. And thank you, Chairman, for delegating me to go through the specifics. But Mr. Chairman, allow me also to inform you that the Economic and Business Policy Board Committee has a specific tax unit that is actually chaired by CPA JJ, who is next to me. He will do the presentation for that. Thank you very much. JJ, please.
All right, JJ, can you please lead us through?
Thank you, Chair.
I hope we are not going to end up with the last person. Please, JJ.
Thank you, Chair, and thank you, honorable members, for this opportunity. I'll go straight, tax head by tax head. I'll start with the Income Tax Amendment Bill. And we are only focusing on those issues we have identified that are critical to manufacturers. The first and foremost issue is the introduction of 5% withholding tax on interest paid on loans from foreign financial institutions. Under the current law, when a manufacturer or any other business borrows from a foreign financial institution, bank, or any other financial institution, the law provides that there is no withholding tax. And the essence of that exemption in the existing law is to ensure that Ugandan businesses have access to affordable capital. As you are aware, one of Uganda's challenges is access to affordable financing. And this was one of the issues that was elaborated in NDP4, that in order to achieve the tenfold growth, access to affordable financing will be critical. However, in the 2026 bill, under Clause 9, we are seeing an introduction of 5% withholding tax on foreign sourced borrowings from financial institutions. This is not from related parties, but from financial institutions. Currently, under the law, if an entity, a multinational, borrows from a related party, which is not a bank or a financial institution, withholding applies, and we are not disputing that. What we are disputing is when a Ugandan manufacturer or business is encumbered with borrowing rates of 20% and above, and you're financing long-term capital investments, it is not sustainable, it's not competitive. You cannot manufacture and sell products when you're borrowing at 20% rate. You won't be able to sell them here, you won't be able to sell them outside Uganda. So what does that mean? This proposed withholding tax is going to be an additional cost to the Ugandan business, to the Ugandan manufacturer, when they borrow from foreign banks. Why? These foreign financial institutions, in their terms of borrowing, they include terms that if there is any withholding imposed, you, the borrower, you bear the withholding tax. It's a standard term. So that means that whereas the law as proposed is saying that the withholding tax is on interest paid, it is indirectly imposing additional costs to the Ugandan manufacturer, to the Ugandan business. And we are suggesting that we need to reject this amendment because the little revenue we are targeting is going to have much more greater negative impact of affecting production in the country, affecting employment, affecting exports, affecting competitiveness of Ugandan businesses. Moreover, when these foreign institutions are lending to Uganda, they insure these loans. And the premiums those insurers charge is based on the risk of the country that these funds are going to. And Uganda being a third world country, insurers charge a higher premium. And that cost is already passed to the borrower. So already, Mr. Chairman and our members, already the cost of borrowing, even when there is an exemption in the current law, the borrowing is very high.
Yes, Honorable.
Thank you very much, Chair. Probably the Concordad guide that the presenter sticks to the document, because now he has spent 9 minutes actually on one item on a document that has about 18 pages, and yet we have many others. Because he's actually presenting on behalf, and I thought this is the position that is agreed. Now he has gone outside what is here.
Yes, Honorable. You can also take this opportunity to introduce. I don't know who that one is.
Chairman, I think let's not do this as a ceremony. The points he makes are very important points. If it is a ceremony that they come and appear and go, you can even ask them to leave their documents and we read. So some of us are patient. So please allow him to continue. If there is any colleague who is not patient, you can excuse yourself.
Can the people know who you are? Please introduce yourself.
My name is M.J. Ibrahim from Chira.
Let me also request the rest of the members who have just come to introduce themselves.
I'm Dr. Kefa Chwanuka, MP Kiboga East Constituency, member of this committee.
Thank you, Mr. Chairman. My name is Gerard Nangoli, member of Parliament, Elgon North, and a member of this committee.
Thank you, Chair. Good morning, everyone. My name is Patrick Ocham. I represent Apache Municipality, member of this committee. Thank you.
Okay, thank you. A member observed that possibly you may have to stick to that. Well, as the earlier on guided, just raise the specific issues, but it's also right to elucidate on some of these things. That's okay. Of course, there's a way you can be precise. Like this particular point, you have actually raised the issue that there's a risk that this will eventually be factored into the cost of the capital that you have borrowed. And I think so you can still continue elucidating, but also be mindful that you may have to be concise. All right, go ahead.
Thank you, Chair, for the guidance.
And I think we shall give you 20 minutes for UMA to do the presentation, and then we react to it. Honorable Semuju, but then you have just come, you even don't know when we began. Possibly I should guide you. What we are saying is 20 minutes or enough is relative. You might find actually they might be having only one issue, and it might even require only 10 minutes. So I think it is not just right for you to say 20 minutes, because that's a relative
Chairman,
factor.
we can pretend, but nobody will present this document in 20 minutes.
What
I don't know why
we are
you are in a
saying,
hurry. Where are you going?
Honorable Semuju, yes. I think for the sake of decency of the conduct of this business, I think we are setting ground rules.
To present.
Can you listen to the chair, please, Honorable Semuju? What I'm saying is we are setting ground rules. I am very sure if we had all the latitude, I'm sure UMA would even have 3 days to have an engagement with us. But definitely, we have to shape ourselves according to what the resources that are available. And for this time, the resource is time. So we definitely have to limit ourselves to that particular constraint. We appreciate what you are saying. Possibly we might even get an opportunity to engage UMA later, so that we can exhaust some issues. So, all right. So, JJ, can you continue with your submission?
Thank you, Chair, for the guidance. I'll move on to the next point, which is the introduction of alternative minimum tax of 0.5% for businesses which carry forward losses beyond 7 consecutive years. That is under Clause 8 of the bill. Under the current law, loss-making companies for 7 years or more are restricted to carry forward losses up to 50% of the losses. This particular change is coming in to add a tax of 0.5% of the revenue. In other words, we are changing from taxing profits to taxing revenue. Under income tax, businesses generally are taxed on profits, not on revenue. And the reason for taxing profits, you're saying that if you have made money, let government have a share. But when you change and you say you're taxing revenue, income tax, not VAT, but income tax, you're simply saying that we are not going to wait for you to make profits. Government wants its share now. And the question is, who is going to finance that share when there are no profits? Essentially, what we are saying is these loss-making businesses need to close. In other words, we are saying as an economy, you should not have a business that has losses beyond 7 years. That's what you're saying. But in reality, it is possible for businesses to make losses beyond 7 years, especially when you have granted them capital allowances. Which capital allowances, you tell them that they can carry forward, and then you have limited them to 50% if it is beyond 7 years. Countries that have developed do not kill loss-making businesses. If you might be aware that some of the companies that are global players today, when they were starting in their early first decade, they were making huge losses, but with a clear long-term plan and prospects and strategies. But now when we come and say we want to tax revenue, you're simply saying, for you, if you are not making profits beyond 7 years, you have no business in Uganda. That is very dangerous for the country. That is very dangerous for employment. And that's very dangerous for revenue collection, because these loss-making companies are paying VAT, they are paying withholding tax, They are paying pay as you earn. So if you're just focusing on the 0.5%, we are, in Uganda, they say, oyoza no yanika mutaka. Meaning that you have washed, but then you have laid the clothes in the soil.
So you are anyway saying that it defeats the purpose. Tax is on income.
Yes.
Tax should not be on revenue generated.
Yes.
Otherwise it loses the definition of taxation. Yes. So go ahead.
Thank you. I'll move to the next one, which is introduction of capital gains tax on sale of non-business assets. That is under clause 3 and 13 of the income tax amendment bill. The bill classifies the disposal of a non-business asset as property income, which is subject to income tax, and also introduces a 6% withholding tax to anybody who purchases a non-business asset. This particular amendment has so many complications. One, it does not define what a non-business asset is. In other words, a non-business asset without the definition can be anything as per the current law. It can be someone is selling their personal house to raise money for education or for medical treatment. The current law would tax such a person. Or it could be a one John jet to survey has purchased shares in one of the listed companies in Uganda. That share I would have bought is not a business asset as per the current law. With this amendment, it would make my share that I've bought in the listed company a non-business asset, which is subject to income tax, which is subject to withholding tax of 6%. Or it would mean that I have sold my old TV at home and I'm selling it to somebody else. As per the bill, such a transaction would be subject to withholding tax and income tax. And our view is this kind of taxation, whereas it seems to be targeting revenue collection, it would end up simply creating implementation challenges and no revenue would be collected, and the little revenue that would be collected would create huge burdens to the few people who would be targeted. And our proposal is, let's not accept this amendment. We need to look at what are we taxing exactly. Because when somebody is selling a non-business asset, selling their personal item, they are not doing business. They are not doing it for profit. They are doing it for a personal urgent matter which requires money. They are not making any profit, so we shouldn't tax it. And if we include a withholding tax obligation, that means that if I am selling an item to person B, and that person B is required to withhold, they will be stating the law, and they would be right to withhold. But as to whether they will remit it to URA, that's a different matter. So we are creating a loophole for people to collect tax, yet they don't have the capacity and means to comply with the law. Chair, I'll move on to the next one, which is interest capping rules under clause 6 of the bill. Under the current law, anybody who has a loan from whether from a bank or outside Uganda, they are subject to interest capping rule, which is the expense that you claim for corporation tax purposes is limited to 30% of the earnings before interest, tax, depreciation, and amortization. And the purpose of that limitation is to ensure that Uganda's tax base is protected and there is no excess interest deduction claimed by multinationals. That was the purpose. However, the wording of the law had a number of challenges at implementation. And this bill is correcting some of the challenges. So we welcome the amendment. However, our view is that the amendment is only addressing 10% of the problem. The problem that is not being addressed is, one, borrowings by local groups of companies are still subjected to this limitation. What do I mean? If you have Ugandan companies that are entrepreneurs, have started businesses here, they declare the income, the money they earn is taxed here, 100%. They are not taking out money out of the country. But our rule currently is exposing these companies to this limitation, and that is affecting the ability of Ugandan-based homegrown investors to grow and expand. Two, the other challenge that is not addressed is the current law affects even borrowings from commercial banks in Uganda, from UDB, and these kinds of borrowings do not have an effect on profit repatriation that was intended to be addressed. And Chair and honorable members, I would like to give the example of Kenya, which had a similar rule when they introduced it in 2022. Kenya faced the same problems we're highlighting. However, Kenya was fast enough to address those challenges in 2023, whereby they amended their law to provide that this particular interest capping rule applies to multinationals only and to only loans from outside Uganda, rather outside Kenya. And our request to honorable members is we need to move fast in resolving bottlenecks that affect Ugandan business environment. Otherwise, we shall have a challenge of attracting and growing Ugandan businesses. Members, I'll move to the next item, 5, which is change in payee brackets under clause 20 of the bill. The proposed amendment reduces the threshold from 235 to 335,000 shillings and adjusts the brackets accordingly. Honorable members, the 235,000 shillings in 2012, if you adjusted it for inflation to around Feb, it is about 400,000 shillings. That means that the purchasing power of 235,000 shillings, as it was in 2012, it is now about 400,000 shillings. That means that the increase of the threshold to 335 is still too low. The other aspect is we have, in the current bill, we have maintained a 40% bracket to apply on amounts above 10 million shillings. In 2012, 10 million shillings was seen to be high, a high income earner. When you adjust 10 million shillings for inflation, it is over 17 million shillings today. 17 million shillings is equivalent to 10 million shillings in 2012. So what we are saying is that if you are taxing 40% on amounts above 10 million today, you're creating a problem. One, these workers are overtaxed That means that the compliance of businesses is likely to be a problem. Because when you look at the statistics in terms of number of employees, they are not more than, on the payroll, on the pay returns, they are very few. Yet we have so many workers in the country. And when you speak to these people who are not declaring pay as you earn, they tell you, with these prohibitive taxes, you can't survive. That means that we need to make the tax system fairer by adjusting the rates beyond the way we have done it. And our proposal is, let's adjust the threshold to 500,000 per month, eliminate the 40% income tax rate or reduce it to 35% the way it is in Kenya, so that you create more disposable income to encourage savings and consumption in the country.
Are you saying, because the base of argument is the time value of money?
Yes.
Are you saying it should be adjusted accordingly for all the brackets?
Yes, Chair.
All right.
Chair, I'll move on to the next one, which is item 6, the tourism hotel tax holiday for tourist facilities, where we are introducing a tax exemption for investors in this area who meet the thresholds mentioned of investment. Chair, we welcome this amendment as it is going to encourage investment in our tourism sector. The only adjustment we request that is made is, under the current tax holidays for strategic sectors, there's a time limit for exemption of 10 years. The current bill has no time limit, it is open-ended. Our suggestion is we need to align it to the existing exemption tax holiday of 10 years, so that these investors, when they invest and get this benefit, after 10 years they should start contributing to income tax. Chair, I'll move on quickly to the next one, which is extension of Jagali hydropower project exemption. Chair, we welcome this amendment because it will help to stabilize the electricity tariffs, considering that income tax on this project would be included in the tariff. Chair, I'll move on to the next one, which is taxation of foreign sourced income earned by resident individuals. Under the current law, there's a challenge of these resident individuals being overtaxed on foreign sourced income, and the current bill creates harmony and consistency in the tax regime, which is much welcome. Chair and honourable members, you allow me now to move to the VAT amendment bill. And the first item is the exclusion of the claim of input VAT on imported software. The bill is being amended to ensure that when you import software through customs, that VAT you pay is not claimable. Under the current law, when you import software through online systems, you pay VAT at 18% as an imported service, and that VAT is not claimable. It's an additional cost to the business. However, if you imported the software as a good through customs and it is imported through different media and is declared and taxes paid, that VAT you pay is claimable. Already, Chair and honourable members, as a country, we are lagging behind in information technology. And we know that information technology is a key driver of economic development and competitiveness, improving efficiencies, improving products development. Our view is that the denial of this input VAT for software that has been declared at customs is simply making matters worse for Ugandan businesses to access software. Because the software through online, already you suffer VAT, you can't claim. So this amendment, it's like we are discouraging people from accessing the latest technology out there. And our proposal is we should not accept the amendment. The next item is the increase of the VAT registration threshold from 150 million to 250 million. We welcome this amendment because it's going to reduce the burden of small businesses and the challenge URA has with enforcing compliance with those small businesses. However, we note that the 250 million threshold of revenue in a year is still too small. There's need to align it with the presumptive taxpayer regime, where we already identified that 500 million is relatively low under the Income Tax Act, and therefore there is need to have 500 million as a registration threshold. Chair and members, I'll move on now to excise duty. The first item is the increase of excise duty on fuel. Chair and honorable members, this amendment, its timing is very dangerous. Already, as a country, we are saying that energy is a very critical input for all sectors of the economy. And when you make energy or fuel extremely expensive, then you're killing the economic system. And given the ongoing increase in fuel due to the ongoing war in Iran and Middle East, we note that when you increase the fuel at this time, you are going to destroy the many good things we would have done as a country from an economic perspective. And when you look at how much other countries are trying to do, they're actually trying to reduce taxes on energy, on fuel, to make it more, to reduce the impact, the hit on the economy. Now, if Uganda were instead increasing, the question would be, in which economic world are we living in? So, honorable members, our proposal is to reject the amendment.
Our time is running fast, but you can get a bit faster.
I'm almost concluding. The other item is excise duty on paints, varnishes, and lacquers, where we are introducing excise duty at 3% for local paints and on imported paints at 10%. Honorable members, this particular amendment is going to affect the cost of the construction industry because it's a key input. And our proposal is there is need to consider the impact it's going to have in terms of the costs. And our proposal is you need to either reject the amendment or have the duty to 1% and ensure that if there are imports from the East African market of these same products, they are not given a higher rate, because otherwise would be seen to be having barriers of trade to our EAC members. And already, as Uganda, our members have issues with the Kenya market access, Tanzania market access. So if we have duty on these imports from the region, we are likely to have more problems of the ESC integration. The other item is plastics, where we are increasing excise duty on plastics, some of which the increase is 100%, where others the increase is over 2,000% increment. Honorable members, these plastics that are being targeted are key packaging materials for manufacturers. You cannot sell a manufactured product without packaging it. And that means that these kinds of increases, they are going to affect the competitiveness of Ugandan manufactured products across the region. And that means that Ugandan products are going to be expensive outside Uganda, and there is a risk that imported products are going to then be cheaper than Ugandan products. And our proposal is there's need to focus more on the mandatory recycling content framework as a country, because if the problem we are trying to address is environment, then we need to have a framework as a country that addresses the recycling of plastic products, and already there are ongoing projects within the private sector to invest in recycling plants. Now, with this tax, it's going to kill that initiative. And that means that at the same time, when you increase tax rates the way they are being proposed, the revenue we get from VAT, from income tax, from excise duty itself under the current rates, we are going to lose it. And our proposal is, let's not increase this much. And also, honorable members, I would like to remind you about the sensitivity of plastics in this country. Excise duty on plastics has been a sensitive issue that the President has on several occasions deferred, given the huge impact it has on the overall economy. And our request is that needs to be taken into account. The next item is excise duty on cement adhesives, grout, white cement. Honorable members, excise duty was introduced on cement on 500 shillings per 50 kg bag. We are now proposing, under the current bill, to increase this to 1,000. That means 100% increase. Cement is a key input in the construction sector. Our proposal is this increase is going to affect the demand for these products. And when the demand is affected, that means that the manufacturers in Uganda of cement are going to sell less. And that means that they are going to pay less tax because there are fewer sales. These other tax heads are going to be affected. So the tax that is being targeted to be collected under this increase is likely to be offset by a bigger reduction in other tax heads. So we are suggesting to maintain the current excise duty rate of 500 to prevent contraction in production volumes and preserve regional competitiveness. The next item is cane beer or beet sugar and chemically pure sucrose. There's a proposed 200% increase in excise duty. This is going to increase the costs of production and final consumption of these products. Our proposal is, if there's to be an increment, let it be 10%, because that reflects a more reasonable increment that also aligns with inflation. It is higher than inflation. Otherwise, you're going to have a situation where the demand and consumption of these products is going to go down, which will affect VAT, corporation tax, and employment contribution, and affect regional competitiveness of our products. The other item is cooking oil from being increased from 200 to 400. This is a 100% increase. We are suggesting that let's adopt a 10% increment instead of 100%. That means that this does not destabilize the market. And you want to ensure that the market is not destabilized, not to affect other taxes. The other item is stamp duty, where we have stamp duty transfer of 3%, which is a 100% increase from the current 1.5%. Our proposal is to maintain 2%, rather to increase the duty to 2% from 1.5%. This will align with the region, because in Tanzania the rate is 1%, and we are saying for Uganda, let our increase not be more than double what our regional players are doing. Otherwise, Uganda's competitiveness as a market for investment is going to be affected. Then the other one is the duty on motor vehicles and motorcycles, where stamp duty is being introduced. Our proposal is, currently there is duty on motor vehicle insurance of 35,000 shillings, and our proposal is let's avoid double taxation on the same item, because if you have stamp duty of 200 on a motor vehicle, at the same time when the vehicle is insured, you also charge stamp duty. You're charging stamp duty twice, even if the amounts are different. So we are saying that just choose which one do you want to charge. Then finally, on stamp duty is introduction of the statutory document retention period of 5 years. We welcome this amendment. The only correction we request to be made on the bill is to remove the words "at least" from the 5 years, because it creates issues of interpretation challenges at implementation. Yet the goal is to make sure that the 5-year time limit is observed by everybody. To the Tax Procedures Amendment Code, there is a proposal of remission of principal tax arrears outstanding as at 30th June 2016. We welcome this amendment because it's going to help to clear the ledgers on the URA system. Chair and honorable members, allow me just to mention one item that is not on the bill, but is very critical and affecting manufacturers and other businesses, which is the 30% tax deposit when a taxpayer applies to the tribunal. At the moment, every taxpayer, when you go to the tribunal to challenge an assessment, you're required to pay 30%. That is regardless of whether the assessment is an issue of interpretation or the assessment has clear errors that need to be corrected, or regardless of whether the taxpayer has capacity to pay the 30%. Honorable members, this is a big issue because we've seen increases in assessments and increases in enforcement of agency notices due to the 30% when a taxpayer applies to the tribunal. This has crippled businesses that can't afford. In other words, we have seen tribunal decisions where a taxpayer is told that because you haven't paid 30%, we will not hear your case. And the question is, what should happen to such a taxpayer? Or we have seen cases where URA has assessed about 1.5 trillion shillings on one single taxpayer. And the liability is later found not to be correct. Should the 30% be demanded at that point? Our request, honorable members, is there is need to look at this issue and we find a solution. And we have prepared a petition that is being submitted to the Speaker of Parliament and the President to highlight with research, backed research, showing how Uganda is killing its own businesses through 30%. Thank you, Chair.
Well, thank you, JJ, Mr. Tusabe. So, Chairman Uma, any remarks before I throw the matter to... Okay. Yeah, thanks very much for that quite elaborate presentation. And I'm sure everyone has been trying to follow up. So I want to invite members now to react to that particular presentation from Uma. I will start with Honorable Kanya, then Honorable Karim. Or maybe before Honorable Kanya you come, let me request the members who have just come to introduce themselves. Goli.
Thank you. Thank you, Chair. Thank you, Chair. My name is Ogwal Moses Goli, MP Dokolo North. Thank you.
Good morning, everyone. My name is Max Ochai, West Budama North Constituency, member of Finance Committee.
Thank you, Chair. Good morning, everyone. Nabukera Hanifa, the woman MP Mkono District, member of this committee.
Yeah, thank you, members. You're welcome.
I'm Poloto Patrick Isiagi, member of Parliament for Kachumbala County, Bukedia District. I'm a member of this committee. Thank you.
So, Honorable Kanya, then Honorable Karim, then Honorable Semuju, then Honorable Ogwal Moses, in that order.
Thank you very much, Mr. Chairman. Mr. Chairman, I want to thank Uma, but I want to reiterate the position which we told the stakeholders who appeared yesterday, that as private sector, we have accepted to be divided so that we get the comfort that we hold these titles. Mr. Chairman, yesterday we had here UNATA, we had Private Sector Foundation, and Basita, we had the other manufacturers. So my appeal to Uma, Kasita, is that don't accept to be divided by the state and by government. We expected you to work. Chamber of Commerce should have been here. You bring one formidable presentation. You can, all of you come because you are separate sectors in quotes. Chamber of Commerce you specialize, manufacturers you specialize, then the traders. But you have one umbrella body that will work with the Private Sector Foundation. But we are accepting to be disorganized and divided. We fail. We are talking as business people. And some of you, when you are here, you don't look at us as business people. You think, in fact, one of them told us we don't pay, we don't buy fuel, we don't buy cars, everything we get free from government. But most of us you see here, we do business and we feel the pain of taxes. But we always have to think what's best for Uganda. We expect you to be more organized, to give us more research, scientific information. But if it is body now wants to come separate, you don't even have the time to be more organized. Secondly, Mr. Chairman, I want to start with, I want to thank you for the presentation and Chairman Uma.
JJ,
today,
switch off that mic.
Today you have come and you have given this parliament the respect and image. Some institutions came here without their board chairperson, without the board members, without the EDs. So we wonder whether they take this issue of tax serious, and yet they collect membership fee from their members. So I want to thank you, Chairperson Uma, Kasita, and all the organizations that are here. You have come with the entire board. You have come with the leaders of chief executive. It shows you take this matter serious. So I want, that is, Mr. Chairman, a message from the people of Tororo. I want to thank them.
Thank you, Kanya.
Mr. Chairman, the issue which disturbs me, and I've seen yesterday in private sector, we have seen in your document, we want to encourage you to do more research, and do more research, and do more research. Constitutionally, the president is the Minister of Finance. Constitutionally. So when you come here and you say the president has been deferring Kavera taxes, that means it is us Parliament who want these taxes. The bill comes from the president because it is him who wants to impose this. So you need to put it square on his head so that understand. Secondly, on Kavera and plastics, we need you to guide us. Rwanda has banned some of the plastics, but the manufacturing industry is growing. If you want us to support plastics in form of components or as raw material for the manufacturers, do for us classification. Do for us classification, and then give us a plan for recycling and to reduce the losses and damage we are having on the environment. The cost by National Water, Government of Uganda borrows money, and we approve it here. The National Water keeps extending pipes deeper and deeper, and that's why they went to Katosi. If you look at the cost, so give us alternative. Otherwise, you will have difficult to convince all of us here to support not imposing more tax on plastics. Secondly, on Bujagali, you need to have more information. Do more research, meet URA. URA did audit on this corporate tax time limit. Auditor General did audit. We, the members of Parliament, we constituted a committee to investigate the issue of Bujagali. And grudgingly, we closed this matter to 2025. We closed it. It should have ended in 2020. They have accumulated a lot of profit. They have taken a lot of money. So by giving it 2032, don't think it is a favor. There's even a provision for us to give them more money to repair the bridge and the dam. It is unending drainage to the economy. The issue of defining business, non-business asset, you are spot on, but give us detailed information so that we can, because some of us look at URA, we are going to meet URA, and we need a bit of more information. What classification, what non-business asset should we pay tax? Because if we don't pay tax, how will the country move? So we need to agree what non-business asset should we pay tax and which one should we leave out. The question of plastic paint, that one we should support it. And vehicles, these are rich people, people who own cars, should pay the tax. But border we should remove. Mr. Chairman, the issue of software. Mr. Chairman, why don't you?
Yes, point of order, Honorable Bumari.
On me,
Mr. Chairman, I didn't want to raise this order to my senior Honorable Kanya, but he's repeating the same, because we are just getting views of the guests that we have called here. And then for us, we have our time to argue whether to retain or to do what. But for him, he's saying, this one is okay. For Bujagari, we cannot allow. And yet we have not decided on what to do. Is he therefore in order at this time to preempt the decision of the committee?
Yeah, Honorable Bumari, I think if you listen carefully, Honorable Okanya seemed to inform the other side that it seems there's some information you haven't yet got. And he listed the sources of information, which I hope they were private too. It is not that he ruled. After all, we are sure that later we shall have an opportunity to discuss this matter. So to me, I think he was just providing information that...
Thank you very much, Uncle. That's why you long live, Uncle. By the way, on a serious note, is my uncle. I originate from Karamoja, so I'm very proud of him, and I keep praying for him. On the issue of software taxes, we thought that UMA would come here and support innovation by allowing most of this software to be developed locally. And that's why I thought we are proposing to impose tax on the imported software. We have not understood you very well. How do you support innovation? Because let me tell you, these guys, for example, URA is paying huge amount of money, and they transfer this liability to us. So please advise us, how do you support innovation?
In fact, we support you. If you move around the region, software that is applicable in most of these countries is homegrown software. And actually studies have indicated that buying a software off the shelf may not be very appropriate for certain type of systems. And the one that you really develop according to the way you organically grow is sustainable. Otherwise, the purchase of software over the shelf actually is not sustainable financially. So we thought that would be one other way we would encourage innovation. Yeah,
and then lastly, Chairman, the issue of this taxable tribunal, Chairman and colleagues, we need to have a consensus on this. And this is 30%. But give us alternative. Can we think about insurance to avoid every person without a serious reason to take URA to court, to go to TAT? So give us alternative. What's the best practice in other countries? Yes, Chairman. Through you, Uncle.
Yeah, Chair, budget.
Thank you.
Now they have revealed your other court which you are hiding.
I would like to thank UMA for raising this matter. Actually, Honorable Kanya should not be saying give alternatives. You see, when you ask somebody to pay this money of corporation tax, when there is a dispute, you should be very clear that the corporation tax is as good as paying dividends. The practicability of this tax and dividends is on a cash. Saying you have made profits alone does not give you ability to pay, because you may have made a profit but there is no cash. Profit does not automatically mean you have the cash. So this tax itself is so deceptive and very much discouraging investment, as you has mentioned. When I invest, I want to get money. So even if I've got money, so what? If I've got money, why are you so lazy? You want to grab it from me. You discourage me from investing, but you wait for me to, when I go to consume the money. You go for indirect taxes. Allow me go and enjoy in a hotel. I've made my money from my business. I've put another wedding. I've been drinking beer. You tax me when I'm consuming the money. But this thing of coming, this tax is like of a robber coming to break your house and grab the money you have made. This is a total robbery. Thank you. That's the information I'm giving.
Yeah, of course, I don't know. Normally the argument people bring is this particular 30% tax payment actually ties capital. It ties, because I was actually reading somewhere that about 8 trillion shillings has gotten tied up to these disputes. So you can imagine if we tie capital of 8 trillion shillings, what it would have done. Those of you who make money can imagine 8 trillion, Mr. Pickfair, what it can become in another 30 months or 12 months or so. So those are the intricacies of this particular thing. Yes, Honorable, it was Honorable Masaba, then Honorable Semuju, then Honorable Goli, in that order.
Thank you very much, Chair. One, it's a matter that we raised yesterday, and one of the colleagues from Mukwano tried to explain. We need to know why the prices are already going up, and most of the business people are claiming the manufacturers have increased the price because of the new taxes. Yet we've not yet concluded on the taxes. I've seen a team from cement. I've noticed there's been a high increment in cement prices by about 1,000 or 2,000, and all the dealers are claiming that the factories have increased cement prices, the prices they are giving them, because Toro cement is now going for 32,000. Yet 35. So I think you need to come out clearly on that, what exactly is happening, because fuel prices, you might claim fuel, but they are saying it concerns taxes, the new tax proposals that we've passed, which we've not yet passed as Parliament. On your document, I want to thank you for the document. It's good, and I do agree with many of your recommendations. For example, when you look at 2, the 0.5 on gross income, I think this is something in my view, we need to reject. Because, for example, when you look at Uganda Airlines, it has been making losses for 7 years now. So it is as if we begin taxing the gross income of Uganda Airlines now, because it has made losses for the last 7 years since it started operation. So this is good. I think it was well researched, and I do agree with you. When you look at proposal 3, the capital gains tax on a sale of a non-business asset, I think you got it wrong, because your argument is about the definition of a non-business asset. But when you look at the income tax cap 340, it defines a business asset. So it's defined. I think the discussion should be that we've left it completely open, because now even if I'm to sell my personal house, my residential house, I'll have to pay a tax on that. So I think we need to maybe reject that. Will be a discussion of the committee, but the argument shouldn't rotate about the definition of a non-business asset, because the business asset is defined, which automatically leaves the non-business asset as everything else.
Asset, that is not business.
Yes, that is not
business purposes. That's how you define you lawyers.
On proposal 7, the extension of Bujagali, I've seen you've recommended to accept the amendment. I do agree with Honorable Kanya. You need to do some research. And when I see your justification, I'm surprised that is the same justification the Ministry of Finance is giving. So I don't know if your decision was influenced by the Ministry of Finance or you had a discussion. Because as part of the task force, the parliamentary team that was set up to investigate this matter, and we went up to Kenya, Nairobi, we went to Kigali, we did huge comparison, and we saw what exactly is happening. And I will not state the minister, but one of the ministers who were with told us that it was a bad deal for the country. But because Bujagali was at a time when we had a crisis with electricity, we made some bad decisions which need to be corrected. That is why our committee, we recommended that this, whatever, shouldn't be extended. Because this is a corporate, the CIT, the corporate income tax, the tax on their profits that they are taking, not on. So this is something I think you need to do more research on, other than just accepting, maybe because you're influenced, I don't know, but probably.
Yes, Honorable Masaba. In fact, what came out of that committee report is the generation capacity was not 100%. So if it was 100%, definitely would have reaped from the economies of scale to reduce the cost of electricity. So for us, we still think you may have not really looked at it to know that actually the cost of power would even come low, given the current circumstances. If they were generating the full capacity, and also the utilization was full capacity, to definitely bring the cost down. So maybe you need to go and look for more information. Otherwise, it seems for you have already arrived. The cost of power can still go down. in their current circumstances. So, Honorable Masaba.
Yes, thank you, Chair, for that. On Proposal 8, taxing of foreign-sourced income earned by resident individuals. I've seen you've accepted this amendment. I don't know if your team did thorough research on this, because in my view, it's quite dangerous. You're looking at it as a foreigner who is staying in the country, earning from Uganda, being taxed from foreign sources. But
can you, I think are you talking about the capital? The money that has been borrowed?
No, income tax on resident individuals.
All right.
Why I believe it's dangerous without you coming up with the right proposal. My sister, who is out in Abu Dhabi, might be charged. They will be at the mercy of Uganda Revenue Authority. I don't know if you're on the same page. Why? Because when you look at the definition of a resident individual, there is the permanent test, the permanent home test, the physical presence test, or a government employee who is abroad. So someone, if my sister leaves her family here, she has a home here, she leaves her family, she goes, she's a kadama somewhere out there making money and sending back, then she will be charged income tax on that. She will be considered as a resident individual. So maybe if we looked at it in a way of putting maybe a threshold, a certain threshold, because there are people, there are Ugandans here who have multi-million investments in Dubai, who are making money from Dubai, millions of dollars. So,
yes.
Thank you, Chair. I understand where Honorable Karim is coming from, and I want to think Mr. Tusabe could not elaborate because of the time, but the provisions catering for that are in our laws. If somebody is earning from outside Uganda and they have paid income tax, what they will only be required to do is to show in their return and show evidence that they paid tax. And income tax, actually, I mean employment income, will not be subject to tax here again. So that shouldn't be a worry, because if you've earned employment income and paid taxes outside Uganda, it is not a subject for tax here.
Okay, Honorable Masaba.
Chair, that's why I said many of our Ugandans will be left at the mercy of Uganda Revenue Authority. I don't know if my colleague heard me well, but I quantified it, because not many of our people out there do have this knowledge and do understand these bills. So that is why I'd said maybe we look at protecting, because most of the people I assume who do not understand the things are I would call them low income earners, those who are barely surviving. But of course the large corporations, the big individuals, those ones do know well how things do run. Then Chair, on plastics, on the buveras, it's just something I noticed. I've had the discussions with many of these buvera collectors, and they claim that manufacturers, you're no longer interested in recycling. I don't know how true that is, recycling, because this is something that would help. I think you can comment on that as well. That's all, Chair. Thank you.
Honorable Semuju. Okay, when we come back.
Chairman, I just have one question for the manufacturers. In the presentation, the argument against the increment almost on all bills is that it will affect production, it will affect prices, etc., etc. Kindly, if you have studies you have done, because these taxes have been increased almost annually. It's one thing to say either a tax on fuel will increase prices if last year there was an increment and didn't. So do you have specific studies that can help the committee of how these increments have been affecting prices and production and employment, so that if we are going to make an argument, it's going to be a compelling argument, not just an argument for the sake of it. So I want to see these examples. That's all, Chairman.
Honorable Goli.
Thank you, Chair. And one of them is similar to what Samujo has just mentioned. If you could help us, I'm impressed, the taxes you're proposing, you're saying, don't increase it as high as we are thinking. Maybe it can be gradual level of inflation if we are increasing the taxes. I'm talking of the many taxes which we have proposed and you have discussed. I'm requesting from you to guide us if you have, where if you increased it, not to the level being proposed here, the taxes will generate more revenue. If you have that kind of study, please you avail it to us so that we can make a decision which is both good for the manufacturers and also for the government. So that issue, all these issues you are mentioning here. For example, there's one tax of, was it 10%, and you're proposing it should be 3% for the local ones. If we could have that evidence to help us. And then secondly, further help us to appreciate if these taxes are increased, because you said it would affect the demand. It will affect the demand. Let me know some things like paint and so on, if it will also affect your competitiveness for Ugandan product versus the product of the community. You know, the tax arrangement within the community, Uganda and the community. If you could also give us some information on that. The other is advice. Ekanya mentioned, it is good for you to work as private sector, because I'm seeing one point here. If you need to work together even with the software developers. You are proposing that we don't protect the software developers, but are you working together with those private sector who are developing software? Because we may be injuring them, but you may not be knowing that they are being injured because you think it is injuring you. So it is important for you to work, as Ekanya proposed, as private sector itself, so that you can take decisions which can help the whole private sector, not only manufacturing. That is my advice. Chair, I always want to give you my interest, which is there. Manufacturers, that's where I've worked a lot as a private person. So I may be moving in that direction, but I don't want to discuss a lot, because we will discuss a lot when you are not there. Thank you.
All right, Honorable Jane, and then Honorable Wanda, Honorable Kefa. Yeah, in that order.
Thank you, Chair. Chair, I want to thank the presenter from UMA. I think he was quite elaborate. Chair, I want to comment on the issue of what they raised on the tax on plastics. Chair, I want to first of all underscore the fact that whereas the plastic materials are very key for their packaging and may have made a good contribution to this economy in terms of employment, revenue, we need to know that all these things are better done when the people of Uganda or this world are healthy and alive. I therefore want to know from UMA, which is the apex body for the manufacturing sector in this country, how they are supporting government policy on recycling, because you are aware and we are aware that some of your players in your industry have preferred not to recycle. And I think that one of your roles should be to ensure that you should be having standard operating guidelines for your manufacturers, how they should behave, how they should operate in the industry. Why are you as UMA not ensuring that there is compliance by every manufacturer in the plastic industry to recycle? Perhaps you don't move a lot in the countryside or the outskirts, say Kampala, Mukono, Wakiso. If you look at the level of littered plastics around, really, you would say yes, maybe it is time that you thought of other packaging materials other than plastics. So we want to know what you are doing as UMA to ensure that everybody who's in the industry has a component of recycling of these plastics within the factory. Thank you.
Thank you, Chair. Allow me to...
Chair, just a minute, Chair.
Okay, give.
On Bujagali, even when we had the people here yesterday, they welcomed it, the 7-year extension of exemption. But I wanted to learn from UMA. We've been exempting year after year, and I think it has accumulated almost to another 7 years. I wanted you to bring out some lights of how this exemption year after year has benefited you as an industry, and the economies of scale or the spillover that we Ugandans have had from that exemption, and how much we should expect if we now exempt Bujagali for 7 years in terms of production, in terms of pricing of your final products that we consumers take, so that we are further convinced that I think one year is not enough. Let's give it the 7 years because we expect this at the tail end. Thank you.
Thank you, Chair. Allow me appreciate the presenter, but with interest I want to say I worked with JJ for some time, John Jet to survey, but that does not in any way conflict me.
So these are the same ideas?
Yes.
Can we say so?
No, I will have my views. Tax usually comes for many reasons. It can be to generate revenue, but also to act as a prohibition. So when I come to the Kavera issue here, if UMA can present to us a plan or a way where Kavera can be of benefit and not detrimental to the economy, I am sure some of these tax considerations would be reviewed. Okay, plastics actually generally. Because the intention of these levies is sometimes to prohibit the production. Mr. Chairman, we are in a very competitive environment, East Africa, for example, and I want to agree with Mr. Tusabe's view on the withholding tax on the interest on borrowed funds, foreign funds. Because we want to be competitive, we also need to have finances that are cheap. I have seen in other economies people borrowing even at 3%, 2%. And I think as Uganda, we've been rated as the most expensive. So I think those views hold weight, and I believe we shall discuss them at an opportune time. My concern, Mr. Tsabe and UMA, is that while you were presenting, you were referring to time value of money on many aspects that relate to tax. But when it comes to taxation, for example, when the 500 was introduced per bag, it is some time back. So over time, I am sure the value, the price of a bag of cement at that level was about 20,000 or so. Now, over time, it would be also very important to factor in that time value of money if you're looking at taxation also. Because we are looking at generating revenue for the country, also minding that the businesses must grow. Mr. Chairman, I happen to be an advisor on tax, and we did work at some point where URA had assessed a taxpayer 43 billion. At the end of the review, it came to 80 billion. So our law provides for 30% if one is to go to the tribunal. And I just wanted to demonstrate how impractical it is. The right tax was 80 billion. They had assessed 43 billion. So if you are to insist on the 30, it can kill a business because that is way too high. So I want to agree that that's an issue to review, and then we'll be able to help many companies remain in business. About loss-making companies, I think we need to be convinced. You know very well there is a lot of creative accounting. The questions that come in, how can a company make losses for 7 years and still continue? You don't even see a light of profitability. It will be very important to share with us your studies, because the people coming up with these proposals are looking at how can a company make losses year after year, but still remain in business. Is there something they're hiding? That is where the dilemma is. So it is an issue that you can
you see, there are certain type of investment, like if you are investing in a school or a hospital, you can't run away because these are long-term social investment. You are putting money in a school takes time, it has to pick up. If you are in mining and manufacturing, you invest in buying land and compensating people. It takes years to invest in mining equipment and for you to get returns. There are so many sectors. And
Yes, Honorable Bumari.
Thank you, Chair. Chair, first of all, I want to thank JJ for the presentation. However, I am somehow disappointed because whatever proposal that was brought on table, JJ seems to, and the group seems to reject. This one we reject, this one we reject, this one we reject. I thought they could come out with at least other proposals that they can say, at least this one we can move with, because
no, they made proposals. They have made proposals. They have proposals. Now what he's saying, he's saying the proposals don't seem to be, they seem to be too differing from the other one.
The proposals in terms of government getting money.
Yes, that's what he's saying.
Because what I saw, everything, they are rejecting.
There are somewhere they said 1%. I think government can still get money there. 2%.
I was somehow interested in this one of Peyi, where he said, for example, on the 335, where he said we can raise that one to 500, but I would request that they give us different bands of income tax proposals in each and every proposal that government came out with, so that it helps us on how to handle that. The other thing is about the Buvera and the polythene bags. I am seeing here, even in his document, there are those ones that government exempted that tackles mainly the manufacturing industry. Because here they are talking about bags for food, juice, tea, coffee, all those government is exempting. So it doesn't mean that by increasing the taxes on these others is going to affecting the manufacturing industry or the manufacturing of the packaging of the things, the goods that you manufacture. But the government is trying to address the issue of environment, which you all know that it is also critical, and you have failed also to recycle. So I think this one should be supported because it will help us to address this issue that is affecting the environment. Mr. Chairman, I think that is what I have to say.
Honorable Kugonza. Honorable Kugonza, then Honorable Kefa. Honorable Kefa, we looked for you, we could not see you. That's okay.
Thank you very much, Chair. I would like to join the colleagues in appreciating Uganda Manufacturers Association. First of all, for a comprehensive presentation. And every time they are called upon, they always give us very, very useful information. But also want to appreciate you for the contribution to the economy. And we've seen you also taking on bigger tasks, and we see the complexity of our exports also just moving in that direction, which is a very positive trend. Now, Chair, I am a bit disturbed because there is a statement of fact in the presentation by the Chair of Uganda Manufacturers Association, and that is in the paragraph 2. Uganda Manufacturers Association is grateful for the support that this committee and the Parliament in general have continued to avail in facilitating economic growth and development. Intervention like removal of corporate tax on Bujagal Limited have reduced the cost of electricity, while other tax interventions. And this, from our side, I see colleagues actually kind of saying that they need to do more research about how they are benefiting. Because they are the people who are in the sector, and they are telling us that the electricity, they have actually benefited out of this intervention of exemption. And I think we need to kind of really get to some level to be reading from the same page.
No, we are telling them that they can benefit more.
Yes. Yes, and so I think, colleagues, maybe one thing that we need to ask, probably maybe they could make a presentation about how this has actually directly been affected them positively, and but saying that, for example, somebody said they are not agreeing with everything they reject. They are actually in agreement with government on this, that corporation tax on Bujagali should be removed so that they can continue to benefit. So, Chair, I think maybe we can get a little more on that, and but I'm very, very grateful that they will continue to give us this information.
Yeah.
Thank you.
Honorable Gwal, maybe
just something little.
Okay. Honorable Kefa, can we just give him 1 second, then you do it?
Yeah. I'm noting that we are asking Umar to research more on the Bujagali issue. I think that should be left. Umar is telling us that for them they are benefiting. Full stop. The burden of other issues, I think, is on us to discuss further internally. Thank you.
Thank you.
Yes, Honorable Kefa.
Thank you, Chair. Actually, my first point was on Bujagali. I'm just wondering. Okay. Thanks very much, Honorable Chair. Actually, what I'm asking myself on Bujagali, of course, we welcome your recommendation on that you agree with the government proposal. But I'm asking you myself, what's the basis of your opinion on this? Have you carried out any independent study, something that you can share with us? Are you aware that this has come to Parliament before and has been rejected? Or you're just going with the assertion of finance that if you don't do that, this tax waive, this exemption, that's going to be reflected in the tariffs. I think that is what's at the heart of it. It will be very helpful if you can clarify on that. And if you have any additional information which can also help inform us, that will be very helpful. On the tribunal and the 30% deposit, actually there is concern that a lot of money is tied up, actually in trillions. So a lot of money is tied up by the tax tribunal on cases that has gone to it, but has not been able to dispose them of. So I think this is the 30% is coming as a bit of reconciliation, that let the matter be heard, but at least there should be this amount that should be paid, at least to begin with. Now, if you are, as you are saying, you are petitioning, it will be very helpful if at least you weigh those two positions, that a lot of money is being tied up, but at the same time asking a company to pay that is appealing, it's injuring it. How are you, have you thought about that, the reconciliation between the two? I think that will help us very much in proceeding, and hopefully we can discuss it further and probably discuss it with the Minister of Finance. But we need some midway position on that. Thank you very much.
Thank you very much, Mr. Chairman. I came a bit late. I was engaged somewhere. My name is Paul O'Mara, a Member of Parliament representing the people of Otuge County in Parliament, and I'm a member of this committee. I'm also a member of HUMA, so that's a self-declaration. And also it is good that you have one of you seated on this side of the aisle. First of all, I would want to appreciate my colleagues for the commendations they have made about UMA's contribution to our national economy. The President has noted that now we have over 6,000 factories across the, now it's moved to 7, across the country, and contributing to beyond 16% of our GDP. So which means the role you play in the growth of our economy is tremendous. Secondly, I presupposes that the tax bills, in the process of coming up with tax bills, there is engagement normally with the stakeholders. I would want to believe that the Ministry of Finance teams were able to meet UMA representatives before these bills were presented to us here. And Mr. Chairman, I can see them shaking their heads. They were never met. I think this committee should take a position that on matters of tax bills, it would be prudent for the Ministry of Finance to engage these stakeholders before they finalize tax proposals. I think it is important that that should happen. But nonetheless, we have seen your recommendations. You have accepted some, rejected some, made amendments for consideration. we shall look at them. I just want to make reference on two things only. One is on the tourism hotel tax exemptions. This actually is a good idea, but the question we have been asking ourselves since yesterday is that regardless of the efforts we are making, the support from government to promote tourism in Uganda, our hotel rooms are still more expensive than our neighbors, than Kenya, than Tanzania. If this amendment passes through, would the team be able to confirm to us that we will be competitive in that regard? Because most tourists, when they look at hotel rates, they would rather go to Kenya than come this way. So it's something that your team will have to consider. The second one, I've heard my colleague Honorable Wanda eloquently talked about business losses, which the proposal is for 7 years, a moratorium of 7 years, and beyond that, then you should be able to pay taxes on the basis of the turnover. I've been in that business. Everyone who has been there, it is easier said than done. Is that most of the times businesses struggle, the capital layover is very heavy, and by the time you get over even 10 years, you still be struggling. So this is something that we want to consider carefully. But the question also I put to you is that some companies go on to very nice creative accounting, and they just try to avoid and postpone tax payments as much as possible. And if you look at their top line, you find them, the cash is there, they are zooming. But now when they come down here, they load a few items here and there, and at the end of the day, they have nothing, no taxes to pay. So it is a catch-22 scenario where we need to be very nationalistic in our approach. If your business is doing well, please don't do creative accounting, but we shall support you from this side. And
information,
then,
Honorable Mara.
Information, Chair.
Government and the URI employs qualified accountants. As such, there is no cry about creative accounting. These accountants should be able to audit and come up with a corrective version. Does it make us go into a wrong tax? Just have efficiency at URI. So what are these qualified accountants about whom we are filing? They are paying a lot of salary, full-time jobs.
Chair Budget, thank you for your information. This is something that we considered in the last financial year when this same item came. And we are saying URA should be hiring the best accountants ever. They can go and look at the trial balance, all the documents, all the posting. They can itemize it if they want. And they should be able to find that this company is either doing creative accounting, and we know there are penalties there. So for a company to cook books, you must really not be here. So it's something that I am, without declaring my interest, I agree with your position. Finally, there is this item called concentrates, where Uganda is very rich in terms of agricultural products. The sunflower is here, soya beans, maize flour. We are now even doing wheat, cassava. Honorable Goli there is spearheading a transformation on cassava in northern Uganda. Now, concentrates are basically what we need for animal feeds. But it's shocking to find that we are literally importing these items from outside. And the Ugandan manufacturers who are engaged in either oilseed production or even in millings and so forth, their commodities cannot be accepted to do the final work for. I know Mr. Mandela is trying to do that now. Why should we import concentrates? And this one come tax-free. They call them raw materials. They're indeed not raw materials. They almost 90% of those commodities needed for concentrates is already inside there. Can we, as a UMA, do something to make Uganda self-reliant on basically animal feeds, so that we stop this thing of importing concentrates from outside and domesticate this thing in the country? Mr. Chairman, I submit.
Yeah, thank you.
That we stop this thing of importing concentrates from outside and domesticate this thing in the country. Mr. Chairman, I submit.
Yeah, thank you, Honorable Mara. And before we give you time to react, what we have actually observed is, I think you had many other issues that you thought you would really share with this committee. So when we give you an opportunity maybe to react to some few of them, possibly we would look for an opportunity before we finalize the processing of this bill, specifically interact with UMA, if it is within your wish. What I just wanted to say was, one, you know, we are talking a lot about informality in the businesses. I think there should be propositions on how we can really formalize these businesses. Tell us, you know, the other day, the ED of Uganda Medium and Small Scale, it's called Mr. Walugembe, was talking about some of these informal traders. They're actually part of your value chain, especially at the upstream, I think, because they are the ones who will push out your products to the final consumers. So it seems you need them. You help us also propose now we can really formalize them so that they can be structured within your value chain in a formalized way. Then on non-business assets, I think we should look at the exceptions on which assets actually should this taxation be. And then the other one is just to re-echo what Honorable Ekanya had said. I think going forward, as the private sector, I think you'll find a way of sitting down so that when there are issues to discuss on tax propositions, you do it as an umbrella body, which is structured into manufacturing, tourism, etc., etc., so that you make one full presentation at once. And then just glaringly come out that consultations have not been done. Even before the budget is prepared in this country, there are national budget paper consultative workshops that are regionalized. I think this should also be replicated for tax propositions that government does. So we shall impress upon government to make sure that these consultations are done, so that by the time you come here, you really tell us that we engage. These are the issues that we shared with the tax policy developers. And it makes us work even smarter in one way. And then these tax propositions should be based on these tax propositions should be evidence-based. For us, we shall only make a decision based on the evidence availed to us. So this time, this window of opportunity that we want to interact with you, I think you go down and put some of these things, facts across. In fact, the facts should be there, but the way they should be consistent, the way they can be believable. And then on the quality of the products, you know, one way you can really compete is not only the taxes that can help you to compete favorably in the region. I think you also emphasize on the quality of your products and working with institutions like UNBS. This should be robust so that when we really have a product manufactured here, we can really take it to international markets and compete favorably. Much as we're asking for favorable tax regimes, this should also, we should also call on you to do that. So I want just to keep in mind that we shall look for a slot to interact with you on some other issues that you want to share with us, UMA. So you just react to a few things, then we can do that. Thank you. You'll really go and put down so that we can be able to support it.
Thank you very much, Chairman.
And we appreciate the opportunity that we are being given. And for purposes of ensuring that we are able to be effective in terms of feedback, we have been coordinating here and clustering the responses. One thing that stood out is on Bujagali Energy Limited. In terms of additional information, I think it played out from what the Honorable across there was raising in terms of what is it that we can share in addition to what we said. And I think also my sister brought it up in terms of benefits. I think we'll put together information from where we sit of the impact of this exemption and how that impact has played out in terms of benefits in the manufacturing sector. The second aspect is to do with plastics and Kavera. There was a question around recycling. What is it that we're doing in terms of ensuring that we don't negate our responsibilities on the environment? We have teams here, and very specifically, he will be coming across because there's a big activity that's going around on recycling together with Director Chirunda to give you a snapshot of what is happening. Because what we seem to see here is there is some issues of information asymmetry that we need to plug. And we want to take it that actually we're not interacting for the last time, and we should keep the interaction, especially with this committee, work in progress, so that we don't show up when there is budget. Because the economy is around us. For issues to do with tax, he will come in so that we can then be able to really address those. And I think then big time challenges on informality. There is a case study that we have prepared for you, and I will be inviting Emmanuel, maybe to begin with you, Emmanuel, on informality, because one big thing that we're not looking at is that the formal economy in Uganda is actually smaller than the informal. So we're putting a lot of effort on the few people that have come actually, that you can identify here. But out there is disaster. And I want to, with your permission, to invite my brother Emmanuel to take us through that informality, then we take it forward. Thank you.
I was of the, you know, we have agreed that we shall give you some slot before we actually finalize with this. Why don't we use that opportunity to
for that informality?
Yes.
Okay, on the specifics then on Kaveda.
Yeah, even the tax things, the rest you can put up. Just respond to something, a few.
Okay. But I need the Kaveda, Mr. Chairman.
Just highlight a few things.
Not a problem, we will come in.
Then the rest, you know, during that thing, you will even exhaustively. And by the way, it will be, the beauty is it will be towards the tail end of the thing. So it will be so vivid in our memories at that time when we interact. So you just react to a few.
Kavera will come in.
Through you, Chair. Through you, Chair. On the plastic tax, I would like to first of all appreciate the passion that has been demonstrated in the room. It is good for our leaders to be this passionate about our environment, and so are we. I think the first thing I'd like to negate is that manufacturers are not recycling. That is a very, it's
not true and not factual.
It's an untruth. As UMA, we have gone extensively in the last 2 years investing in building the capacity to create what we are calling an extended producer responsibility program. It is a more sustainable initiative in how we shall address plastics in the country and in the environment entirely. Taxing plastic now will not address the plastic that is in Lake Victoria. You need to collect the legacy plastic that has been in this market since the 1990s and what is being produced today. And you need to do it through a framework in partnership with you and NEMA and Ministry of Environment, not by tax. I think what I would like to ask is that you allow for us to submit to you documented evidence of how much is being done, because it's a lot. Some of our members, I would pick out one like Coca-Cola Beverages, Uganda, is collecting and recycling the same quantity of plastic that they're manufacturing. Pepsi Cola, Harris International, and all these companies have come together to create this extended producer responsibility program. I appeal to the committee to hold on this, because it's a long-term thing. It is not a short-term thing. This is not a silver bullet. You can't just tax and then all of a sudden all the plastic will disappear from the environment. I think that's a short submission I can make at this point, but I'll ask for my colleagues.
JJ, a quick one so that we wrap up.
Thank you. Thank you, Chair and honorable members, for your feedback. It's much appreciated. And just to comment on a few items, one on taxing losses, loss-making companies. I just want to give you an example of Tesla in the US. Tesla, from 2003 up to, it started to make profit in 2020. That is 17 years after. That means that Uganda adopting a 7-year time limit and you kill such a business, it means you'll never have a Tesla in Uganda. So that means that this tax policy should not be used to kill businesses behind the assumption of all these companies are misdeclaring, they are doing creative accounting. That's the wrong way of taxing. I want to agree with the chair budget, where he highlighted that if there is any company that is doing creative accounting, URA has built sufficient capacity in terms of manpower, in terms of systems, in terms of software. I will give you an example. IFRIS system, URA has gazetted entities that are supposed to issue IFRIS, meaning that URA will has visibility of your revenue and your expenses. That data is there. If anybody tries to do creative accounting, they will be caught. The CPAs at URA will catch them.
Understand you are also fishing them away from URA. But of course they are capable of sustaining that capacity. So
yeah. So meaning that we should not kill businesses simply because there are few bad apples that we are trying to catch. On the issue of the 30% at the tribunal helping to not tie government revenue, that is important. It is important to protect government revenue, but at the same time, it is important to protect the business that is generating that revenue. So creating a balance, and in the petition we have prepared, we have addressed that issue of creating the balance. So Chair, allow me only stop at those.
Yes, thank you very much. I think we have agreed that we are going to give you a slot before we start considering
on Kavera, on recycling.
Okay, please.
I'm trying also to re-echo on Kavera. In the first way, by definition of Kavera, I request at the Parliament, we can always try to avoid the definition of Kavera. Let's continue plastic, because we are all calling plastic for recycling. And when we say Kavera, then we hunt part of the industry. And by this tax,
so plastic is more universal.
It is actually in our terminology we say plastics is far beyond Kavera. Okay, we have more than 1,000 families of different plastics that all must be recycled. And then in between there, we also have what they call recyclable and non-recyclable. But we all still vie for innovation to recycle all these plastics. And there is science over that. If we had a good time like you have offered us, we shall come with all these details. Luke, take you through the European system innovations, how also Uganda has coped with the South African Plastic Federation to imitate it here. From since 2000, and maybe may his soul rest in peace, the late James Murwana, one of the foundations and pillars of UMA, they introduced this technology here, well replicated from South Africa. We had that time 5 industries, and today we are talking of over 40 industries. And that time, the investment capacity of these industries was actually merely like talk of 20,000 US dollars. But today we are talking of 10 million US dollars. So with a brief of 1 minute like this, I want to conclude and say,
Okay, thank you. All right, thanks very much, Uma, and also colleagues.
Chair.
I think I should.
Chair,
Yes, Honorable.
That issue of Kavera has, plastic, whatever
Plastic.
it is, has been with us actually since 2018, 2019, for a long time. And I think the argument all along has been that improvement is being made in terms of recycling. And that the situation is getting much better. I think what would be very helpful for the committee is having, even if it is a 1-page brief, on what has changed now. Actually, in 2020, this same proposal came up and was passed by plenary, but the president did not sign it. Just kept quiet about it.
All right, so thanks very much, Honorable Kefa. I think you may have to include that bit also in your submission during that interaction. You'll be informed by the clerk on when and where that interaction will be. I once again want to thank you for the time we have spent together, and I would like to take this opportunity to make you take leave from this meeting. Yeah, I think we shall continue, and as we had agreed earlier on from the beginning of the meeting, it was that on matters that have been raised during the foregoing discussion, Siatini, start lining up, Siatini, Kasita, man, where is that matter? They tell you they will see.
Design the galaxy or Uganda, Nonya, Retired, what tired? Clarify, please. Now, I need to go to kindergarten. What do you mean? Retired, and be torn apart.
Of the day on UBC.